So in this video, we're going to be talking about 3 stocks that I think are currently undervalued in the current state of the stock market. Hi guys, my name is Devoid Davis and welcome back to another episode of Beyond the Stock Price. So there has been a lot going on in the markets amidst the current health crisis. And quite a few of you have actually reached out to me to ask me what types of companies am I looking at, what opportunities do I see in the market. Some of you have even asked me about specific companies and what my thoughts around how those companies will fare throughout the current health crisis. So I wanted to do this episode to tell you guys about 3 companies that I think are going to actually come out of this economic crisis in a better position and actually represent opportunities in the current market. In this video, we're going to talk about 3 stocks that I think are currently undervalued on the Jamaica Stock Exchange. Alright, so the number 1 on the list is Wisynco. Now, Wisynco is currently trading at around $13 per share, and historically the company traded at around between $23 and $26 per share. I think that the massive reduction in Wisynco's stock price makes Wisynco one of those stocks that is now currently within the undervalued territory on the Jamaica Stock Exchange. If we look back at the PE ratio for Wisynco, we're seeing that the current PE ratio for Wisynco is around 16 times earnings. This happens to be about the same for the average of the stock market as a whole. The reason I think Wisynco actually represents an undervalued stock at the moment is because if we are supposed to project future earnings for the company, it is my estimation that Wisynco will record for the first time in history around $1 per share in terms of its after-tax earnings. And that will mean that the forward PE ratio on Wisynco will be coming down from its current value. Our estimate for the forward PE ratio of Wisynco puts it between 11 and 12 times 2020 earnings. That to us, in an economy that is growing amidst a stock with such a strong balance sheet and such good fundamentals, could mean that Wisynco will actually be one of the cheaper stocks when we look back at this time, say 3 or even 5 years from now. The second stock is Lasco Manufacturing Limited. Now, I did a video a few weeks ago talking about why I thought Lasco Manufacturing was at that time undervalued. Given how the market has actually changed over the past few weeks, I think the company is even more undervalued right now and presents a really good opportunity for investors. So in this video, I'm going to be giving a qualitative and quantitative update as to why it is that I think that Lasco Manufacturing Limited is currently undervalued on the Jamaica Stock Exchange. The first reason is that whilst we're in this crisis, most Jamaicans are stocking up on supplies. This being mostly consumer goods, mostly fast-moving consumer goods as well as food products. Lasco Manufacturing is one of those companies that produces manufactures processed foods, and they're on the lower end of the cost scale. Next on the list is Lasco Distributors. Now, Lasco Distributors is one of Jamaica's largest distribution companies, and they distribute consumer goods as well as pharmaceuticals. The company has 2 arms, that's the consumer goods arm as well as the pharmaceuticals arm. Lasco Distributors trades at a historical PE multiple of around 20 times. However, when we take into consideration the fact that the company had a one-off payment due to their legal case with FISA and then adjust for the 2020 earnings, the reason I think Lasco Distributors is undervalued at the current price is because I think that coming out of this crisis, Lasco Distributors is also going to be one of those companies that records higher revenues over the next 3 to around 6 months.